Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Decision day. Investors are closely watching what could be one of the most extraordinary Federal Reserve meetings ever, with U.S. President Donald Trump's attempts to reshape the central bank in play. A Bloomberg scoop. TikTok's U.S. operations will be sold to a group including Oracle, Andreessen Horowitz, and Silver Lake, leaving China's ByteDance with less than 20%. And Israel has started a ground operation in Gaza City, with the military saying it will continue until Hamas is defeated and hostages are freed. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. It's Fed Day. We got there, everybody. It's going to be a big one for market participants. Anyone who's been watching these global markets closely, of course, is going to be watching out for not just what they do with the interest rate cut today, because that 25 basis point rate cut is pretty much priced in at this point, but more about the guidance about the path ahead and how the Fed is viewing some of the weakness that has popped up in the labor market. What I would say is yesterday, actually, you did have some surprisingly strong data to the upside. Retail sales figures surprising to the upside, both on headline and on core. So perhaps dents or puts in the tracks those who have been calling for a more severe slowdown in the U.S. economy. Turning to markets, though, what we did see yesterday was a small dip for the S&P, marginally so, but pulling back from those all-time record highs. Once again this morning, S&P futures leaning towards the green as we get into that major event. And we have the handover from Asia-Pacific marginally positive as well, but it should be noted that there, too, what you are seeing is a bit of a peaking route in terms of how markets have been performing. It was, I believe, 9 days in a row that you had consecutive record highs for the MSCI Asia Pacific Index. And you can see we are so far leaning towards another one as well, pointing towards the green. Euro also in focus. I wanted to talk about this because the last couple of days I've been speaking about the weakness in the USD, but obviously that is showing up against other currencies, most notably in the euro. Look, we're breaking through 118.50, getting very close to 120. This, as the ECB have essentially said that they're done with their rate cutting cycle, but then at the same time, completely brushing off some of the political developments in France as pressure builds on the Prime Minister there to find some middle ground on how they're going to be consolidating the budget. So that is the euro. So keep a close eye on that, obviously, into and out of the Fed. And then Brent also in focus. 68.30 is where we're at, down 0.2% this morning, but up in the last couple of days. The trend is slightly higher on back of geopolitical premium and risk in the space that we've been talking about, not just here in the Middle East, but also with Ukraine hitting some Russian energy infrastructure. Switching over, one chart that caught my attention. I think this is interesting, relevant in the context of these stock markets that continue to make record high after record high in the US, Asia Pacific, etc. But take a look at skew on downside protection. This is a very fancy way of saying essentially that people are not really taking advantage of these low volatility levels or implied volatility levels to position for a pullback in the S&P, i.e. people are not buying downside protection in the S&P index. So something worth flagging as the market continues to make new highs. The investor sentiment towards these markets is also pretty bullish as well. So that's our chart of the day. All right, moving on to another big story. Bloomberg has been told that TikTok's U.S. operations are set to be acquired by a consortium, including Oracle, Andreessen Horowitz, and Silver Lake. Sources say it's part of a framework deal President Trump will discuss on Friday with China's leader Xi Jinping. Oracle shares saw a bump in the U.S. session on the news. Let's get more from our tech correspondent, Annabelle Drewlers-Bell. Big scoop from Bloomberg overnight. And yesterday, both the U.S. and China did announce that there was a framework towards a TikTok deal. Now we understand that there will be 3 U.S. companies who will be looking to be buying a stake in TikTok. What do we know about the size of the stake? What do we know about the price tag?
Yeah, 2 great questions and 2 questions we actually don't have answers to right now. Look, actually, the terms of the deal are pretty similar to what was reported a few months ago, because this isn't the first time that we've actually come close to having a deal for TikTok or ByteDance to be able to divest its U.S. operations. But then it was scuttled by the U.S. starting the trade war again with China. This time around, though, again, the suitors are the same, pretty much. I mean, Oracle, Andreessen Horowitz, and Silver Lake, as you said. We don't know exactly what sort of stake each of those are going to take. We've heard maybe that Oracle, for instance, could end up having a small one in the business. But importantly, what we do understand from sources, and this is new as well, is that ByteDance's stake is going to fall down to around 20% or below that level, and that could be enough maybe to satisfy US lawmakers and their national security concerns. So that's sort of one of the big takeaways from this latest development.
Operationally, what does it mean, though, for U.S. users of TikTok? Are they going to have to migrate to a new platform? What exactly happens once this deal is done and dusted?
Yeah, that's a good question as well. I think so. Operationally, for US users, they're going to get a new app. That's what we understand is on the way. In terms of other operations, I mean, again, we come back to sort of unknowns, and one of the big unknowns is the algorithm. This is really prized technology. What was reported from the China side after these talks in Madrid was that perhaps ByteDance, the parent company in China, could end up licensing the technology to the US operations. That could maybe be enough because, of course, you can't forget in all of this that Beijing still needs to approve this divestment as well. Again, how does that look from the US side? Well, it's also a big question because under that framework that was passed back in 2024, ByteDance, the parent company in China, isn't allowed to have any sort of operational control over the algorithm. The question, though, is what's that difference? Maybe you've got the algorithm, but it's how the algorithm has actually ended up being deployed, and that could be a question more for the new owners in the US.
Yeah, so interesting. Annabelle Drewlers, thank you so much. Well, rallies in U.S. and Asian stocks have hit a pause less than 24 hours before the big Fed decision. Gold, though, is holding gains as dollar weakness persists. Fed officials are expected to begin a cutting cycle after worries about tariff-induced inflation kept them on hold all year. Let's bring in a friend of the show, Charles-Henri Monchau, Siow at Banque. It's really good to have you with us.
Thank you.
Looks like they're going to cut 25 basis points today. Otherwise, they probably would have telegraphed if they were going to go for 50 basis points by now.
Yes, exactly. Well, there is this tug of war between the labor market, which is definitely cooling down, and then inflation, which has been sticky. So that's the first thing. And then you also have all of these diverging views within the FOMC. So I think it's going to be an awkward meeting. And all eyes are obviously on the guidance, on the dot plots, and also on the economic projections.
So I guess the big question is going into today is not whether they cut, but whether this is one cut, sort of perceived to be an insurance cut because of the backdrop, or whether he guides towards a series of consecutive cuts afterwards. If he does the latter, does the economy actually warrant that guidance right now?
Well, not really. I was just checking the Atlanta Fed nowcast this morning.
3.4 or something. Yeah.
You know, it's going to be the first time since 2008 that they are cutting rates with inflation at 3%. We are all-time highs, everywhere, or in many markets. Spreads are very tight. So it's a very unique situation. But it reminds me a bit the mid-90s when the cycle was prolonged. So we had some historical precedents. And usually markets react quite well to this. Yeah,
well, markets, as we just spoke about, keep going from high to high. I just wonder if your hypothesis is correct and if U.S. GDP actually is something closer to 3%, they're not going to be able to actually execute on the 6 rate cuts that are priced in by end of 2026. How would stock markets react to a hawkish repricing there?
Okay, first point, so we agree on this. This is why we think that the market currently is too dovish. So we think that there are probably, let's say, less rate cuts coming. That's point number one. Point number two, it all depends also what the economic growth will be, how the earnings are going to react. I think that the big picture for timing is that markets are pricing in reflation. We have fiscal stimulus, monetary policy stimulus, earnings growth is strong. We also have deregulation. So all eyes are on 2026, and for the timing, you want to be long. And also the market reaction is proving that indeed, it seems to go into this direction. Look at the performance, for instance, of cyclicals versus defensive. Yeah. Also, the global ex-US indices making new highs. So it looks like, pricing in reflation into 2026.
Yeah, but it's also very sensitive because we are at very high valuations now. These markets are at all-time record highs. And yet you saw the chart that I showed at the beginning of this show. People are not positioning for downside. They're not buying puts. They're not buying options just in case this all goes awry. Why would you not take advantage of that as an investor, knowing that the market really is priced to perfection right now.
Yeah, it's very often like this. People are not buying protection when they think that things are too good. But I think what is interesting also in terms of positioning is that, yes, retail investors are, very long the markets. But if you look at asset managers and hedge funds, actually, they miss the V-shape. So why should they buy some hedges, whereas, they need to kind of run after these bull markets? So that could be one reason. To us, the ultimate judge will be the long end of the curve.
Yeah.
The 10-year, the way it has been behaving in the US recently is quite remarkable. But if we do see a spike in the 10-year, what you mentioned before, record high valuations, like S&P 500 price to sales at record high more than 3 times. I've never seen this. Obviously, if we do see the 10-year spiking, then probably we could be due for a correction.
Is it your expectation that we will see the 4%, 10-year yields are around 4% now, that act as a floor for where yields can go in the U.S., given some of those longer-term reflation and fiscal issues that you highlighted?
Well, I will not be surprised that we break these 4%.
To the downside.
To the downside. And one of the reasons of this is also what they are doing in terms of manipulating the curve. They are issuing all of the treasury bills, and then they are buying back the long hands. So that's one reason. The other reason is that, yes, indeed, we're going to see probably some cooling down, and that will be enough, let's say, for the long hand to ease. So that's, let's say, the optimistic scenario. And then you have a pessimistic scenario into 2026 that at some point, if the market thinks that Donald Trump might manipulate the Feds, then we are in terms of like a 1979 scenario where certainly, you have the long end of the curve, moving too high, too fast.
Yeah, well, I was going to say, all of this are assumptions, are chat around what the Fed are going to do next year, kind of ceteris paribus, assuming what we know about the Fed and how they make their decisions. Recently, there's been a lot of talk about governance, about political interference, the ongoing legal case with Lisa Cook. You have Stephen Myron now acting as a temporary voting member on the committee. Looking ahead to 2026, is it actually possible to determine what the Fed's reaction function is, given that there is a change in composition and there is a perception out there that they will want to please the president with their interest rate decisions?
It's a unique situation, especially for Stephen Myron, because either he keeps his job at the Fed, but he needs to please Donald Trump, or he moves back to his original position and he still needs to please him. So far, what we can see is that the Congress is more in favor of Donald Trump, obviously, because they agreed on the Stephen Myron nomination, and then the courts, for the time being, is against, because Lisa Cook is still there. But I think all eyes on Lisa Cook, because if she leaves the Fed, then he can replace her with someone on his camp. That means that we have 4 against 3 on his sides, and then in February we have these the selection of the regional Fed presidents, where they can tweak it. So that means that indeed we could have in 2026 a Fed which is quite kind of manipulated, and this is how you can see these risks. I mentioned before of steepening, the curve steepening.
So how do you hedge for that? How do you hedge for that happening in 2026?
Well, in the long run, when you have, let's say, a Fed which is, let's say, too easy, easing too much, then you need to be in risk assets, or you need to be in store values. Gold could be Bitcoin, but it can also be stocks. But obviously that means some accident down the road. Accident, again, the ultimate judge will be the bond markets, the long end of the curve.
Yeah, always the way. Never fight the bond market. Jean-Henri, thank you so much. Jean-Henri Monchau, Banque's CIO. And coming up, Israeli forces begin an expanded ground operation into the heart of Gaza City. We are live in Jerusalem next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersacci in Dubai. Israel has started a long-threatened push into Gaza City after weeks of airstrikes and incursions into its outskirts. An Israeli military spokesman says operations will continue until Hamas is defeated and hostages freed. The offensive comes as a UN-commissioned report concludes Israel is committing genocide against Palestinians in Gaza. The report calls on the international community to push to end the war and punish those responsible. Let's go to Jerusalem and speak to Bloomberg's Dan Williams. Dan, talk us through the latest first on the offensive into Gaza City. It has been intensified in the last 24 hours, and this on the heels of the U.S. Secretary of State Marco Rubio paying a visit to Israel.
Very much so. In fact, that intensification is clearly heard here in Jerusalem. I'm something like 50 kilometers away from the Gaza Strip, and every few minutes you hear the rumble of explosions from Gaza. Those are presumably airstrikes or the detonation of explosives used by the military to clear a path for tanks, for troops, and to clear minefields or booby traps that they believe Hamas has set in buildings approached by those troops and tanks. So there's certainly an intensification. We're hearing of a mounting casualty toll within Gaza City. This is effectively the be-all and end-all moment for this almost two-year-old war. To hear everyone tell it, Hamas, Israel, and indeed the United States, as you noted, the chief U.S. diplomat, Marco Rubio, was here just this week. And after visiting Israel, he went on a spontaneous bit of shuttle diplomacy to Qatar, exactly when this operation was launched. And it's clear that there is a conjunction, deliberate conjunction there, with the Israelis pressing ahead with an operation they threatened to do within 6 weeks. It was authorized 6 weeks ago. There was a reluctance to do it. They clearly preferred a surrender by Hamas, a capitulation. And that's the message taken by Rubio to Qatar, a major player in this crisis, a host of Hamas, and also a mediator in past truce talks. So there is a tag team effort here, if you like, the Israelis making good on an operation they threatened to carry out long ago, and their American ally amplifying Israel's calls for a surrender as an alternative to a bloody showdown in what is effectively the capital of the Gaza Strip, what is effectively the last main stronghold of Hamas, where Hamas appears set to for a last stand that will cost dearly in terms of Palestinian civilians still stuck there, casualties among them, Israeli troop casualties, and potentially casualties among the hostages still held by Hamas from the October 7th, 2023 attack that ignited this conflict.
Yeah. And let's also talk about the mass displacement of Palestinians as well within the Gaza enclave, with the IDF saying yesterday that around 350,000 Palestinians have been displaced, some even internally within the broader Gaza city. Let me just also ask you about this UN-commissioned inquiry. The results came through yesterday concluding that Israel has been committing genocide. On what basis?
Well, there are 5 benchmarks for the Commission of Genocide as deemed by genocide scholars. According to this report, Israel has met 4 of those benchmarks in its conduct. A damning report, and one that was damned in return by Israel, both on the basis of the motivation and the methodology. It's worth remembering that pretty much from the outset of this war, critics and enemies of Israel used the word genocide against it. And the intention is clear. It's not just a show of support for the Palestinians. It's an effort to bring to a close this war, a war that 2 years on remains unwon. And the Israelis withdrew from the Human Rights Council. That's the UN body. The report is an outgrowth of that council. The US has similarly sidelined this council for perceived bias against Israel. It's worth remembering they have a permanent agenda item that deals with alleged civil rights abuses, humanitarian abuses of the Palestinians by Israel. So what this is an amplification of what is by now a fairly old and familiar allegation that's been routinely rejected by Israel and its allies. What it might contribute to, it might provide fuel for the fire of The Hague, the lawsuits being pursued against Israel in international courts. It's very unlikely to change what appears now to be a important to Israel, a critical to Israel last campaign to end this war on terms Israel might be able to deem victory. At the same time, Hamas appears set to putting up the fiercest resistance possible and not capitulating in a way that would bring this conflict to a close peaceably.
Dan Williams in Jerusalem, thank you very much. Now, Now, the Israeli army says it attacked Hodeidah port in Yemen on Tuesday, targeting what it describes as military infrastructure used by the Houthi rebels. The Houthis say in a statement that their air defenses caused great confusion for Israeli aircraft and helped prevent a deeper incursion. The latest strikes came as hundreds attended funeral services for 31 Yemeni journalists who were reported killed last week in Israeli airstrikes. Coming up, Shell's legal fight with South African activists moves into its last round. We're live in Johannesburg later on in the show, but more to come. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersace in Dubai. President Trump says he's spoken to Indian Prime Minister Narendra Modi in a move that could ease tensions between the two major economies. In a social media post, Trump said he had a wonderful call with Modi, complimented him on doing a tremendous job, and thanked him for his support in helping end the war in Ukraine. Modi responded on Twitter, saying he was committed to supporting the India-U.S. relationship. He also says he supports Trump's initiative for a peaceful resolution to the Ukraine conflict. House Republicans have unveiled a stopgap spending bill to keep the U.S. government open past an October 1 shutdown deadline. The measure would keep agencies operating through November 21 and provide new funding for security. It needs at least 7 Senate Democrat votes to overcome procedural hurdles, but does not include healthcare policies that Democrats have demanded. U.S. auto safety regulators are investigating whether Tesla's electric door handles are defective. It comes days after a Bloomberg investigation found a series of incidents in which people were injured or died because they could not open doors when Teslas lost power, especially after crashes. Regulators have received more than 140 complaints since 2018 related to Tesla doors getting stuck or malfunctioning. And it's a big day for markets as we gear up for that Fed interest rate decision. Policymakers are set to cut interest rates by 25 basis points. They're going to be watching out for economic forecasts, in addition to the dot plot for the rest of this year, with, as of now, the median dot suggesting 2 rate cuts by the end of the year. The markets are pricing in an even more aggressive rate easing of around 3 rate cuts by end of 2025. So we'll see whether the median dot actually shifts. The language, the tone, all of that is going to be watched out for very closely late if you're up in Dubai around 10 p.m. over here, but a very big one because it is going to be the first meeting in a while that the Fed start cutting interest rates again. So this is the market picture as we head into the Fed. S&P futures not doing a lot. We pulled back yesterday in trades, and today trading sideways. European markets up 0.3%. Coming up, we'll talk to 91 about the resilience of emerging market investments despite global risk. That's next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Decision day. Investors are closely watching what could be one of the most extraordinary Federal Reserve meetings ever, with U.S. President Donald Trump's attempts to reshape the central bank in play. A Bloomberg scoop. TikTok's U.S. operations will be sold to a group including Oracle and Andreessen Horowitz in Silver Lake, leaving China's ByteDance with less than 20%. And President Trump arrives in the UK as American companies announce plans to spend $10 billion on technology infrastructure. We're live in Windsor with what to expect. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Bersace in Dubai. While global markets taking a bit of a breather, we have the MSCI Asia Pacific pulling back from 9 days of consecutive gains. Every single one of those days, record high. Today, leaning towards the green, but we're sort of petering out a little bit. You can say the same for the S&P. We dipped slightly in trading yesterday, down about 0.2%, but still very close to those all-time record highs as we head into that Fed meeting later today. Euro also in focus. I've been talking a lot the last last few days about the weakness in the greenback. The dollar weaker to the tune of about 10.5% this year, but also it is transpiring versus other currencies, most notably versus the euro. Take a look. We're very close to 120 now. And this with the backdrop of the weaker dollar, the fact that the ECB have signaled that they're pretty much done with their own easing cycle for now, and completely brushing off some of the political developments in France. So notable that the euro keeps marching higher. And then Brent also in focus. We are just shy of $70. And actually, if you go back and look at the chart of Brent over the last, let's say, 2 months or so, it's actually been in a really tight range between about $65 to $69. We don't seem to be able to break out of that range despite everything that's going on with concerns about supply glut, but at the same time, some of the geopolitical risk premium that's building into that curve as well. And then switching over, this is another chart that caught my attention this morning from our colleague Dan Curtis, and just goes to show that as these markets make record high after record high, S&P closing through 6,600, investors are not really buying a lot of downside protection here, i.e. you're not seeing a lot of interest to hedge for a potential pullback in the S&P as deciphered by the options market. So something to flag there, and really just tells you how bullish people are about the outlook for U.S. stocks. Okay, let's also check in on how markets in Asia are faring. Annabelle Jewelers is in our Hong Kong studio. I guess it's a bit of a holding pattern ahead of this Fed meeting, Belle.
For some parts of the market, yes, but actually I like how you say that investors are bullish on US equities. Actually, they're also very bullish on China tech as well. I think there's one real name standing out to us, and that's Baidu. You're looking at a more than 40% gain for the stock so far this month, but actually today the story is also coming down to an upgrade we have from Arete Research, and what they're looking at in particular is Baidu's in-house chip division. This is the Kunlun unit, and we're hearing that it's starting to get more orders as well, even from China Mobile, for instance, and doing better than their peers. So a lot of focus on in-house chip development. We also see that with Alibaba, for instance, and one of the big contributors to the rally. Speaking of chips as well, SMIC, another name in focus. We had some reporting from the FT, actually, that they're starting to trial advanced chip-making equipment. This has been a real pain point for the semiconductor industry as a whole in mainland China, but using that advanced chip-making equipment, some of the technology could rival that from ASML, the big standout on the global stage. But there we go. China tech stocks very much rallying in the session today. What else is driving that? Just take a quick look at what's happening with humanoid stocks. For instance, UBTech here in Hong Kong, but others in mainland China as well. Morgan Stanley sees an extended rally for this. They're looking at things like Tesla's Optimus, Figure AI. We've got the upcoming Unitree IPO. That's one of the best-known humanoid names in mainland China. So again, a lot of focus on that. They're still seeing catalysts to come for this sector. And then how companies are looking to take advantage of this as well, because one of the most interesting dynamics has been that huge amount of dim sum bond issuance. So you're talking about bonds that are issued in offshore RMB into the Hong Kong market, and you continue to see more issuance over the past several years. But so far, year to date, when you compare to what we've seen 1st of January to September 17 for other years, that is a record amount of issuance. So some of the ones tapping it, Tencent and Baidu, those names.
So interesting. And I guess that's also being accompanied by demand for those bonds as well. Annabelle Jewelers in Hong Kong, thanks for the latest. Now, the Bank of Ghana is expected to slash interest rates by 300 basis points to 22% today. The jumbo cut comes as inflation cools to 11.5% in August. That is the lowest level in almost 4 years. Now, for more on the rate decision, Bloomberg's Andiro Ganga joins us now from Kigali, Rwanda. So, Andiro, policymakers are beginning a 3-day meeting. That's unusual for central banks, with 3 days in the case of the Bank of Ghana. The governor has said inflation expectations are actually heading in the right direction. Does that give them impetus to cut interest rates?
Absolutely, Jemana. It's giving them the confidence that they need to be able to cut rates. And if you look at inflation where it is now vis-a-vis where it was in the last 8 months, inflation has significantly reduced. And this is the rate, this rate that they have currently is the lowest that they have had in 4 years. So this gives them all the confidence that they need going in to cut rates. Also, the central bank governor has expressed that inflation is almost hitting their target range of about 6 to 10%. And that's more reason why they should consider cutting. If you look at the last time where they had the monetary policy committee meeting, they cut rates by 300 basis points from 25 to 22%. And this time around, the economists that have been surveyed by Bloomberg put it at 300%, though others are slightly and cautiously optimistic, putting it at about 200. The goal here is to bring rates down to almost match that rate of inflation that the country has, and also to promote private sector taking capital from the banks. In the previous meeting where they cut by 300 basis points, the governor directed banks to start lending more to the private sector, but being a little bit more cautious in their lending because there's a lot of non-performing loans in the economy. This time around, he's saying he wants to see more capital going to the private sector to try and continue pumping up that vibrancy that they have seen in the economy.
Yeah, Andira, but at the same time, they have to be cognizant of what has been happening with the cedi. The currency has depreciated around 15% just in the last couple of months. Could that complicate or limit the extent of how much the central bank could go on the interest rate cut today?
At this point, Jumana, not necessarily, because if you look at what President John Mahama has said, they're targeting annually appreciation of about 5% or depreciation of about the same amount. This year alone, if you look so far in the first 90 days of the year, the currency appreciated by 30% against the US dollar. And this is after it had depreciated by over 20% last year. And despite the fact that it has depreciated in the third quarter, it has still gained 20% against the dollar, which is really high and is above the target that they have for themselves. And so what they're trying to do with the currency is just allow the market fundamentals to decide what the real value of the cedi is. The president said that at 16 to the dollar, the cedi was extremely undervalued, and at 10, the cedi is overvalued. They're looking for the cedi to gain its own momentum at about 12 so that they can have a balance between exporters who are feeling like they're not making enough from the exports and importers who have had a really good run when the cedi was performing really well.
Bloomberg's Andira Ganga, thank you so much for the preview and what to expect. Now, emerging market stocks are rising for a 9th consecutive session in their longest winning streak since February 2024. It is records everywhere, it seems, today. That's amid growing risk appetite as traders gear up for the Fed's highly anticipated rate decision later today. But ahead of that meeting, the market has been jolted by actions that threaten the independence of the central bank. My next guest says this, as well as France's political and economic strife, are a timely reminder that political risks have never been unique to emerging markets. Alan Siow, co-head of emerging market corporate debt 91, joins me right now. Let's start with the Fed meeting. What would be a good outcome for emerging market assets today?
Good morning, Jumana. Pleasure to be with you again today. I think the market is basically priced in a 25 pip cut. And in fact, it's probably priced in not just a cut today, but also a sequence of cuts for the remainder of this year and into next year. So anything less than that, I think, would be a disappointment and ultimately represent a tightening of conditions. That's just how far we've come. As you shared in the segment just prior to us going on air here, we've actually had a series across markets of very strong performance, not just in equities, but also in fixed income. Your colleague Annabelle mentioned, new highs in China tech. We also participated in that dim sum issuance wave that we've seen throughout this year, including 10 cents a recent issuance overnight, the first time in a long time that they've printed both a short duration as well as a 10 and 30-year dim sum bond. This is accompanied also by recent issuance by other countries in EM, including Saudi Arabia. I had the pleasure of spending some time with the Saudi Arabian delegation yesterday in London.
Yeah, I was going to ask you about those dim sum bonds, but since you mentioned them, I'm going to bring them up now as well. There has been a deluge of issuance, it would seem, out of some of these China corporates because they see the advantage of issuing in yuan currency versus USD. Obviously, it's cheaper because yields are lower there. Do you think that this is a phenomenon that's likely to persist, or are they just taking advantage of a situation where right now you are seeing this sort of divergence between dollar yields and renminbi and yuan yields?
That's exactly the situation, Jumana. I think it's important to emphasize that emerging market corporates have access to more than one funding source. And that uncertainty that we discussed around the Fed has meant that many emerging market corporates have been able to take advantage of their domestic markets. Chief of those is the Chinese one, which is the second largest bond market in the world. So you've seen a lot of companies, not just Chinese companies, issue in this market. That has been a phenomenon on the rise since China opened its market, but has returned to the fore now in the midst of all of this dollar volatility and dollar rate volatility. And the reason I wanted to mention Saudi Arabia is that this is the next country we think that is going to be reopening its markets to global investors.
Yeah, and let me just also one other question on China, because we've been talking a lot about the tech rally there, a lot of, again, excitement around AI, record highs too. Are you seeing a similar level of excitement to invest in bond markets and fixed income in your space?
We're seeing a lot of enthusiasm in both markets. It's fair to say that my equity colleagues are probably having a better time of it than us in fixed income because of the prospect of higher returns. But we're very pleased to see that I think global investors are reassessing the investment landscape across both DM and EM, and are finding EMs attractive both for the diversification, but also because some of those themes that we've seen that have been, if you like, very DM specific, like AI, are broadening out, not just in the supply chain, but as we've seen in China today, the development of these chips onshore in China may be another enduring trend that we'll see both in equities as well as in fixed income.
Yeah, and let me pick you up on Saudi and what you were saying there. The expectation is they may have to come to the market again. And obviously, their fiscal needs have been growing throughout the course of this year. And yet the trend for all-in yield has been to move lower and lower. Again, how long do you think that paradigm can exist for, given the expected funding needs for the kingdom over the next few years?
So when we were discussing this with the Saudi Capital Market Association yesterday, at your offices in London, in fact, I think we were booted out of the room because Bessent was also in town along with Mr. Trump, all ahead of the Fed. On the Saudi point, I think it's important to note that Saudi issuance spreads have been declining despite the supply, showing there's still healthy demand for that. The Saudi local currency will be entering the GBI EM index, the local currency index, as early as January next year. Again, representing the entry of another meaningful emerging market country to that mix. And in this way, I mean, I was reminded by the entry of China. Saudi is obviously a very different animal to China, but the stories mirror each other, which is, you know, we're at the early stage of development. Entry of the rial into the EM mix will again diversify funding sources and may provide another channel for the kingdom and its companies as they expand on the global stage.
Yeah, so interesting. And thank you for the little tidbit around Scott Bessent as well. And breaking some news there. Alan Siow, co-head of emerging market corporate debt at 91. Thanks so much for joining us. And coming up, President Trump has arrived in the UK for his second state visit. We have the latest on Britain's decision to shelve trade talks on British steel next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Persechi in Dubai. Well, the UK has halted negotiations with the US to remove tariffs on British steel in a blow to the industry. The decision comes as Trump says he's open to some trade concessions as he departed the White House for a state visit.
They want to see if they can refine the trade deal a little bit. We made a deal, and it's a great deal. And I'm into helping them. Our country is doing very well. We've never done this well. We're having trillions of dollars coming because of the tariffs. And they'd like to see if they could get a little bit better deal. So we'll talk to them.
For more, I'm joined by Bloomberg's Lizzie Burden from Windsor, just west of London. It wasn't that long ago that we were talking about President Trump's visit to Scotland. He seems to really enjoy coming to the United Kingdom. But let's just talk about what we were just showing in the introduction there, and the fact that the UK have decided to shelve talks on eliminating tariffs. Not an auspicious start for some UK industry leaders.
Exactly, Jemana. 25% at least gives certainty to businesses, but it really is a blow. It's less than the 50% tariffs that other countries' steel exports will be facing. But you have criticism from the opposition parties here in the UK saying, why did Keir Starmer tout that he was going to get zero steel tariffs before it was guaranteed by President Trump? Look, it's an expectations management exercise. The UK also suggesting that we're not going to see the ground given when it comes to US tariffs on Scotch whisky as well. But as you heard there from the President, there is much to be still negotiated. We're expecting him to announce $10 billion worth of economic deals, including on defence tech cooperation, a nuclear partnership. We're expecting a closer ties between the financial hubs on both sides of the Atlantic. The Financial Times reporting maybe a crypto deal as well. And when it comes to tech, from the companies, we're going to see the biggest bosses of Silicon Valley here. Microsoft talking about $30 billion worth of investment. Google talking about £5 billion to spend on AI. So there's a lot of money on the table here, Jemana.
Yeah, and reports that Jensen Huang, Sam Altman also will be attending as well. So some of the big tech leaders also flying in alongside the president. But of course, Lizzie, this comes as at a politically fraught time, not least for the UK Prime Minister. So much has gone down, so many reshuffles within the UK Labour Party over the last week, and not least the actual UK ambassador to the US, Lord Mandelson, had to leave his post.
Completely. This could not come at a worse time, it has to be said, for Prime Minister Keir Starmer. Look, today's going to be all about pomp and pageantry. We'll have F-35 jets flying over this 11th century fortress behind me. So in theory, it should be the low-risk day for Keir Starmer. But that is a relative term, of course, when it comes to US President Donald Trump. And as you say, it really is the worst possible time politically, domestically for Starmer in the UK. He's languishing in the polls behind Donald Trump's friend, I might add, Nigel Farage of Reform UK. And as you say, he's got these 3 forced departures to have to deal with from his government in just the past 2 weeks, not least Peter Mandelson, because of his ties to Epstein. And Epstein is the link between Starmer via Mandelson, the King via Prince Andrew, and President Trump himself. So there could be awkward questions about whether Starmer really thinks that somebody with links to Epstein is fit for high office. But really, Starmer needs to show that he isn't appeasing the president, because the political cycles, of course, are out of sync on both sides of the Atlantic. Trump is deeply unpopular here in the UK. And just for example, British officials very worried that President Trump will push Starmer on his pledge to recognise Palestine, crucial for your region, of course, at that UN General Assembly meeting in New York next week. So here is Britain deploying its Trump card. Let's see what Starmer can get from Washington that is actually meaty in exchange.
Yeah, well, already reading this morning that 4 people have been arrested because they projected an actual image of President Trump standing next to Epstein onto Windsor Castle last night. So it is very much politically fraught for those 3 linkages that you mentioned. Lizzie, thank you so much. Oh, coming up, South Africa's top court will hear arguments in a legal battle between environmental activists and Shell. We'll have more next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. South Africa's top court will hear arguments in a legal battle between environmental activists on one side and Shell on the other over exploratory activity planned off the nation's wild coast, where whales are often spotted. The court's ruling could determine the trajectory of the country's offshore oil industry. For more, let's go to Johannesburg now and speak to Jennifer Zabazaja, Bloomberg's chief Africa correspondent. What is the argument that's being put forward by the activists in this matter?
Well, Jumana, this is an argument and really a legal case that's gone back just about 4 years. And if you just focus in on what is at the heart of the matter, you were talking about it there. Environmental activists, anti-oil and gas activists, really concerned about some of the activity that we've seen by Shell and other energy companies. And specifically, they're concerned about this activity known as seismic surveying. And really what it does, the official definition, is blasting sound waves towards the sea seabed. And so over the past 4 years, we have seen the courts ruling in favor of some of these activists and again of these energy companies to explore. But what these activists are saying is that this sort of exploration actually violates their cultural and spiritual rights. If you take a look at the argument, though, from Shell and some of the other energy companies, they are saying that it is not it is not up to them whether or not they should be allowed to explore or not. And in particular, they don't believe that they should be responsible for some of the fines that have been inflicted on them. And in particular, they say that they are not to blame for the lack of community consultation. And once they were actually given the exploration right, they believed that all was in order. And so many in the industry are wondering how this really sets up offshore oil exploration for some of these major companies. And again, how can some of these activists actually move forward with their own arguments? Because this is not the first case similar to this that we have seen over the past few years.
Jen, what does it mean for South Africa's offshore oil industry, this case?
Many energy companies are looking at this and saying, really, where are the courts going to side? Because if you take a look at the constitutional law here, activists and also people are entitled to their health and the health of the environment being taken into effect when there are these types of projects that are brought into the country. And we have seen a number of these environmental NGOs actually winning cases over the past few years. But then really, what does this mean for the industry and the precedent that it potentially sets for South Africa? If you just look north up the coast, in Namibia, we have seen that, of course, become a major exploration, an offshore exploration point for a number of energy companies. South Africa wants to also get in on that for their own economic benefits. And so over the next 2 days, we're going to wait to see how this case really concludes and what this means going forward.
Jennifer, thank you so much. Jennifer Zabazaja, Bloomberg's chief Africa correspondent. And that rounds up our show, Horizons Middle East and Africa. I'm Jumana Versace in Dubai.